welcome to a new day trading strategy video of mine. In today's video, we're going to be looking more at the data.bitcoinity.org site, and this is a site that shows us data and metrics for Bitcoin. This was the Patreon suggested video, as you can see, and I've done videos on this site before, but it was only on the bid ask sum, and I really overlooked a lot of the other tools that this site offers, such as volatility and such as arbitrage. Volatility and such as trades per minute. So what we're going to be looking at today are the trades per minute that gives us data on retail traders. And we're also going to be looking at volatility for looking at when is the best time to enter and when is the best time to exit. I've talked about volatility a lot of times. I've talked about the average true range. I've talked about VCI, the volatility channel index. I've talked about Bollinger Bands and looking at volatility with that. This is going to be similar. The volatility that we're looking at today is historical volatility that's calculated with a standard deviation. This is the calculation for volatility, except the last part. That last number is going to change. But this is the calculation for any math nerds or coding nerds who are interested in taking this further. But we're not going to be doing much of the calculation stuff. But what we are going to be talking about is how can we look at volatility and how can we use volatility to predict a change in the trend? So extremely high volatility and extremely low volatility can also, both can lead to a change in the trend. Now, why does this occur? I've explained this in the past, but let's say that we have an uptrend and we have a period, uptrend's going up on average volatility, and then we have a period of very, very high volatility. What does that tell me? Well, that's telling me that a large amount of the potential buyers who are interested in buying have likely all just bought into the market. And when that occurs and price is at overbought because we got all that buying, what's likely to occur is two things. One is that when price is here, and typically it's going to begin to go really quickly upward and then begin to move flat on low volatility. When it's moving flat, that's likely occurring because there just aren't that many interested buyers because everyone who wanted to buy has already bought, and that caused the high volatility. And two is that any other buyers who are thinking about buying probably don't want to buy at that elevated price. They want to find a much cheaper price to buy at. So if no one wants to transact at that price, then price is naturally going to have to go down to try to find more buyers before it can be propped back up. Additionally, downtrend. Market shoots down, and let's say that market continues going down, and then you get a sudden period during that downtrend of very high volatility down. What likely is occurring is a large amount of retail traders who are looking at the market are likely hitting the button to short or are selling off their positions, or investors are leaving Bitcoin. And when that occurs, to their horror, what can happen is the price shoots down, and for a second or two, they're happy that they sold because the price continues to go down. They can find a better price to buy. But then price begins to move sideways on low volatility, and then it goes right back up because they got trapped. And they got trapped in the cycle where a lot of traders who wanted to sell, just like them, all sold at the same time. Now, that's why high volatility can lead to a change in trend. Additionally, high volatility can also begin a trend. So if you have a period of low volatility where price just isn't really doing much, and then you get a period of very high volatility upward, well, that can show us that a large amount of buyers are beginning to buy into the trend, and that can continue to press price higher. Or in a downtrend, if we see it as a consolidation, then a quick down move, that means that many traders are likely beginning to sell into the downtrend, with many more traders probably likely going to continue selling it as well. Now, why does low volatility lead to high volatility, and why does low volatility lead to sometimes a change in trend? Well, let's say the market goes up, and then let's say the market moves on low volatility. What does that mean? Well, that means that a lot of buyers who were interested in buying likely have bought. And that's the same thing to do with a period of high volatility followed by that period of low volatility. There just isn't enough of buyer interest to continue pressing price higher. Another thing that happens is within the order book. When price moves on a period of low volatility for a long period of time, what happens is that the market gets used to that period of consolidation, and many traders are going to put their stop losses right below that consolidation. A lot of traders are going to put their stop losses for shorts right above that consolidation. So what happens is when price begins to go down, it hits all those stop losses because price was like this for so long, and many traders were putting their stop losses here and had plenty of time to put their stop losses down there. Price might just shoot right down and hit all those stops and just accelerate into a downtrend or into a stop hunt and then go up. Another thing that happens is typically retail traders and many traders, when they see a period of consolidation, may want to take profit and exit the market, or just leave the market, leave a short or leave a long. What can occur there is they're also pulling limit orders out. So if I sell my position, then my previous limit sell, take profit, is gone. So what does that do? Well, that weakens resistance, because if there are not that many limit sell orders above price, then once price begins to move up, it's likely going to accelerate upward before it finds a large limit sell order. Same with price goes down. If a lot of people who wanted to buy or were thinking about buying think that the price is too high when price is consolidating, then they might want to pull their limit orders out. And once they pull those limit buy orders, what can occur is once price begins to go down, there just aren't that many bids. There aren't that many limit buy orders. And if that occurs, then price can just accelerate downward. That's why a period of low volatility can lead to a period of very high volatility, because orders being pulled, limit orders getting pulled, and also stops eventually growing in number. And that's what's going to accelerate price one way or the other. All right, so now let's go take a look at this tool and talk less about theory, but let's go take a look at volatility on a longer time frame and on a shorter time frame as well. So we're going to do no comparison. We're going to do linear. And let's take a look at no moving average here and the daily. So what we're interested in here is looking at what is the current trend before we even talk about volatility at all. A, is the trend an uptrend? B, a downtrend? Or C, a period of consolidation or ranging? Then the second thing we want to do is look at what is volatility at this point in time. Is volatility at an extreme, or is volatility at more of an average value? One way you can think about this is any deviation from the normal can lead to a major change in trend. So very high volatility or very low volatility can both lead to a major change in the trend. And one way that we can actually just represent this is, let's say that, this is all relative, of course. Let's say that I just draw a line here, right there. And I draw a line right, let's say I draw a line right here. And I'm using Chrome Draw, which is an extension in Chrome. So we do that. Let me go back to that and hit that. Yeah, so we do that, and we can see that this is really the norm. This is where the volatility is mostly at. So any lower than that is very low volatility. Any higher than that is likely very high volatility. All right, so let's take a look at what exactly happened when price was moving on significantly high volatility. I see this one right here, which is 9/5/2018. So this is likely a point where a major trend either began or a major trend likely ended. So if we go to 9/5/2018, we can see that was here. That was the beginning of the downtrend. And what had occurred is we had this period of low volatility, and then once price began to move down, it may have hit some stop losses that accelerated it downward. Maybe a lot of traders pulled their limit buy orders, and price just moved downward as well. And that high volatility downward continued to move lower, as it normally would after a period of high momentum. Now, what we can also look at is where were the periods of very, very low volatility. Now, interesting enough, we can see that right there, about 1 day before September 3rd, 2018, volatility was tiny, 9.59. Again, these values are all relative. But relative to how high volatility was here, September 3rd, just nothing was happening. That's here. So we can see that it was at this point in time, we had not much volume. So you can see right below, we had not much volatility. So this was a point in the uptrend where it was beginning to weaken. And this is a point where the uptrend died and the downtrend began. Now let's look for another period of very low volatility. And I see June 20th and I see June 7th right there. So June 7th and June 20th had even lower volatility. June 7th was here, 7 June 2018. Price went up. But at this point, just Not many traders were interested in the trend, and then price reversed and went down. June 20th is here. Very similar situation to June 7th. Price tried to go up. Very low volatility here. Not good for the market. So price just went down because there weren't that many interested buyers here. There weren't that many interested buyers here. So price just went the other way to find interest, to find transactions. We look at another period of very high volatility. We can see 4/24/2018 was the very highest. 4/24/2018 is April 24th, 2018, and that was here. So during this day, we had a large amount of high volatility during this day. So what likely occurred is many retail traders may have been buying into this market here. Once we get that high volatility in an established uptrend, what happened? Price went down to a low, immediately went down after that day, 11%. Then what happened? Well, price went right back up, right above this high, so that any buyers who had bought here felt comfortable. They're in profit, right? And once that happens, that actually began the downtrend that went to the lowest low in the past year, down to here, down to 57.50, just about. So right here was the point of likely a lot of retail buyers buying in and investors buying into the market, and then they get hit with that. So that, again, is a major outlier in just normal volatility. We can also look at not just all exchanges, but let's also take a look at the Bitfinex exchange. Now, my lines also do kind of hold here. You can still see that 4/24 we had that large amount of volatility, but we can also see just significant low volatility on Bitfinex on the 8th of October and on the 5th. So that's more current. So on the 8th, that was here, right before the big downtrend. I don't want to say downtrend, I want to say down move, because I don't know if this is going to continue. But right on October 8th, that's right before we had significant volatility, because low volatility leads to a period of high volatility, and then a period of high volatility leads to a period of low volatility, and on and on and on. So that's what I like to look at for long-term volatility. Now let's take a look at 24-hour volatility. I use the same settings here. I don't like to use the minute with price volatility because what you may see, I think it's like glitching here. It got mad. If we go to the 24-hour and just use, let's go back to volatility. Let's go to the 24-hour here, and let's just go back to no comparison. USD, good. Let's go to minute. Let's go to linear, and yeah, none. This is standard deviation right here with Bitcoin price volatility, as you can see. And I mean, there's really not much you can do with this information. So what do? If you hit the hour, you can get a lot cleaner price information here, where I can clearly see in the last day, where was the highest period of low volatility? Where was the highest period of high volatility? So highest period of low volatility or lowest volatility in the 24 hours was at 15 o'clock. So 15 to 16, which is the 15 candlestick. So if we go to the 1 hour here, that was right there. Now, interesting enough, that period of very, very low volatility that I just got alerted to, what happened right after that? A period of very high volatility. We get this crazy candle that shoots down 1%. I can show you that. It shot down 1% and then it went right back up, just volatility all over the place after this period of very low volatility. Where's the very highest volatility? 5 to 6 and 4 to 5. But let's look at just 5 to 6. That was that's here. So that's right here. This candlestick right here was the highest period of volatility that we had in the last 24 hours. Now, interesting enough, after that period of high volatility, the market just responded with a period of low volatility, just not much happening here. And then we get this candle at 11 o'clock, as you can see here, and we're beginning to see that period of higher volatility beginning to climb up. So this is just looking at Bitcoin price volatility in the shorter time frame and looking at it on the longer time frame. I prefer to look at it on the longer time frame, like 30-day, 6-month on the daily. I find this to be very helpful because we can look at relatively high volatility and relatively low volatility. So that's going to do it for looking at the strategy behind volatility. And just to recap on what we talked about, basically any major deviation from normal volatility can lead to a change in the trend, or can lead to a beginning or the end of a trend. And typically periods of low volatility are going to precede periods of very high volatility. Because many people pull their orders, people lose interest, many traders place stop losses as the market goes flat and they have more time to place stop losses instead of the market was like continuing to move in one direction where they wouldn't have as much time to place stop losses. So that all makes sense on why we get low volatility following a period of very high volatility. Now let's take a look at trades per minute. This is the second part of the video where we're going to be looking at another indicator on this site. Trades per minute is not the same as volume. Volume is how many coins were transacted during a set period. Trades per minute is how many transactions occurred during that set period. We could have volume at 10 for 1 minute. That means that 10 Bitcoin were transacted during that 1 minute. However, we could have trades per minute be 1,000. That means that 1,000 transactions occurred during that 1 minute where 10 Bitcoin were transacted. Now, what does this tell us? Well, imagine that the trades per minute was 1. That means that one transaction occurred likely between a very large trader who just traded 10 Bitcoin. Probably not a retail trader. Probably a bigger retail trader, or maybe an institution. But let's say then we have, like the example before, 1,000 trades per minute with 10 Bitcoin. That's telling me that there are a lot of smaller guys, a lot of retail traders who are likely, who just made a move. And that likely means that they're about to get screwed over and the price is going to move just against them. So typically, when I see a large trades per minute value, that's showing me that there are many retail transactions. And when I see many retail transactions, I think a few things. One, that many retail trader stop losses have just been hit. That's going to result in a large trades per minute. Or that many retail traders are trading on fear and greed, and then we get a spike in fear, in a downtrend, which is going to be a spike in a very large bearish candle, spike in volatility, spike in trades per minute. Opposite for an uptrend, price goes up, traders get really greedy, and many retail traders buy into the market, and we get high volatility and large TPM. So basically, a significant spike in the trades per minute is typically going to be leading to a retracement or a reversal. In a long period of just not many trades per minute is going to show us a lack of retail trading interest. So let's go take a look at the trades per minute tool here. And again, I don't like using these settings here. So let's go 24-hour, no comparison. I'm going to do line chart. I'm going to do and this all looks good. And I can look at the Bitfinex exchange. I can look at all. Both are absolutely fine. They look a little bit similar, as you can see. All right, now let's take a look at, during these last 24 hours, what can we learn from when the trades per minute was very high? Well, I see right here at 1645 and at 1644, they're about equal. We have a large amount of trades per minute. So let's go take a look at 1645 and 1644 on the 1 minute. All right, so that would be back here. We're going to scroll all the way back to the day before, which is here. Now let's zoom in to 1644 and look at 1645. 1644 was here. This is likely where we had a large amount of selling. And we also had a large amount of trades per minute at 1643. So that was 784, 1470, and then we got 1620. So really from 43 to 45, we have a lot of trades occurring. Not surprisingly, what's going on here? Price goes right below this low here. You can see that's the low. Likely not a lot, but some traders' stop losses likely got hit and price tanked very quickly. Many retail traders panicked, sold here, as indicated by the large trades per minute, and then price just shot right back up. And then we got the largest trades per minute at 1645 right here. So this is telling me that although many retail traders likely just got stop hunted, a lot of them likely sold. Now a lot of them likely just bought back in, or other retail traders just bought in. I know that because we had 1,620 trades during that 1 minute across all exchanges. And now let's take a look, because we're looking at Bitfinex, how many trades per minute occurred just on Bitfinex at 1645. 265 trades occurred. What volume was 1645? Let me show that. We had 148. This is interesting. We had 148 Bitcoin being transacted, but we had 245 trades being made. So this is telling me that really a lot of small trades are happening. And a lot of those trades are likely under 1 Bitcoin. And a lot of those trades are likely retail traders who are buying into high volatility going upward. What happened? Price struggled to go higher. It tried to go a little bit higher, but a lot of the traders who wanted to buy in had already bought right here. And what happened after it went a little bit higher, just about 0.4% at high? Well, this is where price just tanked. Because we had so much retail buying here, price just kind of chilled for a bit, then it really went down. And a lot of these traders who had bought here, what happened? Well, price went just below that low there, just below that low down to here, and hit more stop losses. Now let's take a look at the trades per minute here. So the trades per minute there was at the very highest on Bitfinex. In 1938, it was as high as 471 trades for 1 minute on Bitfinex. 1636, it was very high as well, 271. So let's go take a look at 1936 and 1938. 1936 was here, right there. So we actually do not have a large amount of volume here. We just have 156 by the read of it. Yep, 156. I'm reading that right there. 156 volume being traded, but at 36 we had 271 trades being made. Well, this is interesting because what happened during 36? Well, that's when we were just about hitting support, and stop losses were likely beginning to be hit. Then at 37 we go right below support and likely hit a lot of stop losses, and that's why we get a large trades per minute. And then at 1938, this is where we got the all-time high of trades per minute. And if I show 1938, the interesting thing here is, look, price isn't moving much. Price is moving on very low volatility on the 1938 candle. But what is the actual value for 1938? 471 trades were made. Yeah, what does that tell me? Likely many retail traders who are market selling to a large bid. And I say large bid because a large bid likely kept price at about 62.20, and then price went higher. Because a lot of those retail traders sold into a large trader, likely an institution or an HFT, and after a lot of them sold right into that HFT, price just skyrocketed up, and then they likely just all bought back in right about here. At 47.48, we can take a look. So 47, we had 297 trades a minute. At 47, that was here. So these guys who had sold at that very bottom to a large bid just panic sold. The very bottom of this downtrend. They all buy back in. I mean, not all of them, but a lot of them bought in when they saw a very strong bullish green candle. Maybe they had been taught that, high bullish momentum, you just want to buy right after the candle. They buy, and then the market goes right back down. So 297 trades spread over 115 Bitcoin being bought. That's telling me there's a lot of retail traders here who are buying in. And then we can also see just a period that kind of stands out. Even at 23.51, we have 190 trades just out of nowhere. What happened at 23.91? We can see 23.91. I mean 23.51. I think I meant to say 23.51. Yeah. So 23.51 was right here. Yeah, that's interesting. We had probably a large amount of buying occur. Let me zoom out a bit. We had likely a large amount of buying occur here, and you can also see that there's high volume. So this is a bit different. We have high volume and we have high trades per minute. So 190 trades occurred over 180 Bitcoin, maybe some bigger traders, and that's maybe why price continued to go higher. But it's whenever you see low volume and high trades per minute, then that can show you that many small guys, smaller retail traders, are likely acting. But here we can see that the market had no issue with continuing to go higher. Also, trades per minute just wasn't even that high. It wasn't like this high at all. So we can also take a look at trades per minute on a higher time frame. That's absolutely fine as well. If we look at the day, that's going to show us average trades per minute during that day. Let's take a look at on Bitfinex, where is the very lowest trades per minute? Well, here, 10:05 and 7:13. So if we look at 7:13, July 13th, we just did not have that many trades per minute. Just not many people were trading at all. Right at the base of the uptrend. Likely not many traders were interested in doing much here, and that caused the market to begin to find some buying pressure and go up. So a complete lack of selling interest here after this very clear downtrend led to that. Now let's take a look at 10:05, which we had the all-time lowest trades per minute. That was here, right? 10:05. Pardon me. 10:05 was here, where we had a decent amount of volume, but just not many trades. So really, not many people are trading at this level. Right here, 10:05 and 10:06 was even lower. So 10:06 is here. So these two candles, just no one's trading. So really not much interest at this price level. And when there's not a lot of interest at a price level, price likes to just move far beyond it or far below it. And that's exactly what occurred here on high volatility to the downside. We got that high momentum there. And even if we look at the 7-day on the daily, we can see that the trades per minute has just been increasing as price has made this move here. You can also look at, you can switch between Bitfinex and all exchanges at all times, although Bitfinex is going to be making up a large amount of the trades per minute and also a large amount of the volatility data as well. This has been a much longer video than I had planned, and if you're still here, I commend you for making it 27 minutes in. You're doing well, viewer. You've maintained your interest and hopefully aren't multitasking in like 14 tabs right now, even though I know I would be at this point. All right, so we've gone over volatility. We've gone over trades per minute on data.bitcoinity.org. We've summed up how do we use volatility and why. Why do certain volatility moves happen? Trades per minute, looking at the correlation between trades per minute and volume of a candle, looking for just a significant spike in trades per minute to try to predict a stop loss hunt and to find when is a stop loss hunt occurring when we get that spike in trades per minute, or when are many traders likely panicking and just selling. And we saw 3 examples of that, where we saw 2 examples of extreme fear, where the market had gone down and then just a lot of trades per minute, market went up. And then that one example where price tried to go up after a period of really going down. It tried to go up, but we had a large amount of trades per minute and price just couldn't go any higher because so many potential buyers who wanted to buy in had already bought. So really that's what we want to look at when we look at the TPM. We can also look at a long period of low trades per minute. This video is long enough, but you can look at periods like this to show you the market's likely not going to be doing anything soon. Period of consolidation and low volatility on the on the 1 minute. And we can see that here, just not many trades are occurring. So, consolidation, weak move, this doesn't really tell me much. But it does tell me a lot when we do get these spikes in the TPM. All right, that's going to be it for this video. And if you have any questions on any of the content, you can shoot me an email. You can check out the Patreon, or you could message me on Discord. Thanks for watching, and happy trading.